Trust and ethics are tightly linked. An ethical person, an ethical company, is much more likely to be seen as trustworthy than an unethical one. And for good reason. Who do you trust? Someone who is intent on being honest and doing the right thing, or someone who isn't? In this lesson, we'll look at the role trust plays in insurance transactions and why, in turn, it's so important to the industry as a whole. In insurance, the product we sell is a contract, a promise. A promise is intangible. It's not something that you can see, taste, or touch. Customers simply need to believe that what they're buying is really what they understand it to be. For this kind of business to work, there needs to be trust. Trust that the companies providing the insurance are financially sound and able and willing to deliver on the promise they sell. And also, trust by customers that they're being treated fairly. Without that trust, what would happen to the insurance industry? Perhaps it's tempting to put the entire onus on insurance companies. As long as their finances are in good shape, then that's all that really matters. Customers should be happy and keep coming back, right? Well, that's too simplistic. We all play a part in this picture, regardless of our professional role. Maybe you interact directly with customers, or maybe you don't. Do decisions that you make impact customers? Do your actions ensure that customers get the right policy at the right time? That pricing is fair? That customer information is protected? Or that claims are resolved fairly? Now, trust isn't something that one automatically has. Rather, it needs to be earned. We all know that. And what's most frustrating is that the insurance industry doesn't always have the best reputation. Why is that? Insurance policies include lots of fine print and legalese. It's hard to trust what you don't understand. The very nature of insurance, a promise that only pays out when things go wrong, may make it hard for some customers to see value. Premiums that increase, even though risk has decreased, sow distrust when customers don't understand the role of market forces. The appearance of bias, real or not, arising from commission models that encourage intermediaries, so brokers, agents, etc., to favor one insurer over another, and pay structures that motivate selling over service. And sadly, some insurance professionals and organizations have rightfully earned their bad reputations by acting unethically or even illegally. Professional incompetence, committing fraud, false advertising, refusing to pay legitimate claims, falsifying documents, improper employment practices, etc. It damages the industry, and the resulting distrust impacts us all. As insurance professionals, these are barriers that we need to overcome when building relationships with clients. You know that you're a trustworthy, ethical insurance professional. Clients only know that if you show them. Remember, with insurance, people buy a promise, not something tangible like a sandwich or a pair of sports shoes. Who would buy insurance if there was no trust that the policy would ever pay out if needed? If there was no trust that insurers would have sufficient funds to cover the claims? If there was no trust that clients were being treated fairly? That's why trust plays a central role in insurance transactions and, in turn, the industry as a whole.